Hello. Hi. Hello, testing. Okay, system is working, so all right. Let's see. Well, you cannot see me anymore. Oh, 1 second. Ah, it's the camera. All right. Okay. Let me see if you can see me now. Hello, testing. The camera mute? Am I not? Hello. Okay. Let me see if you can see me now. Hello. Probably not know how to actually share the charts, but we're gonna talk about that anyway. Hello. Okay. This is my coffee. Let me see if you can see me now. Number 4. Hello. Probably not know how to actually share the charts, but we're gonna talk about that anyway. Hello. Okay. This is my coffee. Let me see if you can see me now. Number 4. Hello. Probably not know how to actually share the charts, but we're gonna talk about that anyway. Hello. Let's see if I can share my screen. This is my coffee. Let's see if you can see me now. Number 4. Hello. Probably not know how to actually share the charts, but we're gonna talk about that anyway. Hello. Let's see if I can share my screen. This is my coffee. Let's see if you can see me now. Number 4. Still an echo. Hello. Probably not know how to actually if it's an echo, share the charts, but we're gonna. What about now? It is better now. Hello, testing. Hello. Hello, testing. This is good now? No echo? Okay, perfect. So, I don't know how to share my screen. It's easier, but as well is it get more complicated end of the day. So what we're going to do today is talking about the absolute basics of the charts, yeah. You as a trader, what do you normally looking into? So What is the meaning of that? We discussed before earlier in other meetings that the main massive amount of money is being moved by bank, hedge funds, so the big ones, the big players, and we are just a little fish into the big numbers of money moving and on. So we just try to make money when others try to make money. You are not pretending that you're going to move the market, any of you. Hope so in the future. Some of you say, well, Danny, I moved the market. That would be amazing. And I was actually watching Daniel Martin in the year 2025, and I can move the market now. Amazing. If that happens, please let me know. Now, we know that will not happen for 99.9% of us. So what I try to explain to you guys is how you will need to interpret, or how you actually need to actually see the charts as a first step. So how this works. So you're going to start trading, and the first thing we said on the previous meeting, previous webinar, is that I want to trade. So what you're gonna do, you're gonna go into the charts, and what you're going to look into, you're gonna go like everyone else, like even myself. When I start trading, I start with 5 minutes time frame. Yeah, 5 minutes, 3 minutes, 1 minute. Yeah, you want to see the action, you want to see the movement, you want to see want to make money quickly. Yeah, so you go all this in your head. Are you looking into? But let me ask you this question to all of you, and this is important, and I want you actually to put that on the charts to make it clear. What do you think is the percentage you should make in a year? Let's see if we have some response. Please, everyone, just giving me an estimation of percentage that you should make in a year based on your knowledge. Doesn't matter. Whatever you think is realistically okay. How much percentage you think you should make in a year? Just writing down a percentage on the chat, please, everyone. Can everyone hear me? Do you start thinking on this? 100%, 200%, 50%, 200 what percentage? Okay. Anybody else? Risking one. What? Well, I'm waiting for everyone to get a percentage distribution there. I'm waiting for all of you. See what you can give me. Hello? So I'll go only one response, and you thinking that you can risk in 1% and make 200% in a year. That is what you're looking for. Anybody else? Well, we go more actually people on this chat. So anybody else, can you please add the percentage to be know what realistically? Okay, fine. So I guess nobody actually know, they don't know what to writing down. So risking 1% to make 200% is realistically is not realistic. Okay, so that is totally away from what normal people actually do. I don't say that you're not going to make that 200% in a year, but realistically, in general, everyone looking for that. What you just say now, 200%, 300%, because you're looking for maybe risking £1,000 to make £200,000, or you're risking £100 to make £20,000, or you're risking, so you're looking for what is called money. So the key is not to actually to focus in how much money you can make or how much percentage you can make. It's about what is the normal percentage top traders, hedge funds, bank, and everyone will make it. So if the top players, the big ones, they make 20, 30, you heard this 35% is a very good benchmark of percentage in a year, why you, the small fish, me, the small fish, we pretending we can make 200%. We're looking for 200, 300, 400%. And you heard those traders, they actually make much more percentage. Realistically, is not realistic. So this is a big mistake traders make. So this is one of the points. Keep it in your mind now, yeah, for 1 second. I'm not saying we cannot make 1 year 100%. I have made that myself, but if that is realistically sustainable for the long run, and the answer is no, yeah. In general, there is exceptions, and I can actually will take you guys through those ones that are one-to-one with me. I will take you to a special strategy that I've been building for the last 25 years that will take you to that percentage, risking very little. So for those ones that actually believe they can make 200%, risking 1% is not real. Well, it's not realistic. It's not actually normal. So what is normal is to make 20, 15, 30% in a year, risking 1, 2, 3, 4%. Yeah, this is what the people normally do. And even bank hedge funds, they're looking for make this percentage. They're risking 1 to make a big percentage of 15%, 20% of a bigger amount. So be aware of that. Yeah. Now, if the average percentage is 20%, 15%, even the famous legendary trader Warren Buffett was having negative years. Even if you're actually looking for negative years and you make it on the long run 20%, why are we looking for more? And then another question, if hedge funds, stock traders, and all that, they're looking to make that percentage, and you look in the charts, do you think you look in the charts on 1 minute? Do you think those traders, they look in the charts in 1 minute? They're looking at massive monthly candles. That's what they're looking for. The big chunk month, and they don't know where because you need to know where the market is going. So how many of you look in the monthly candles and the weekly candles? Even the year candle. We say, what are you talking about? You know, they're looking for that. Believe it, they're looking for those candles. So, or they look what? Not candle. They're looking for volumes, levels, and this. This is actually a reality. The big investors, they're looking for a simple, even I would say 3 months, 6 months is normal for investors, and those ones, they are the big players. So why are you looking into 1 minute? Yeah, you're chasing the big money, that you're actually chasing the noise. You're looking for something that realistically is not going to happen. That is making money that you're looking for to make 200%, 300%, and so on. Yeah. So the first step for all of you is to actually zoom out and see where the market is going first. I don't say that you should not looking into 1 minute, 3 minutes, 15 minutes, 1 hour, and so on. I just said that you should look in first where the market is going, where the river is going to take me. It's going to go long, it's going to go short. What is actually the main direction of the market? If that actually is not moving anywhere, is not going anywhere, or it's actually is moving. So for that reason, you need to go zoom out, but big zoom out, and go for the monthly, minimum, weekly. Don't go less than that, not even daily. Daily is not it's for swing traders. Yeah. 4 hours, 1 hour swing traders. Then we go day traders is actually looking for 1 day below that. So 1 hour, 15 minutes, 3 minutes, 1 minute, and so on. Yeah. So don't underestimate that. Okay. This is very important. First, zoom out completely and know where the market is going. Okay. Fine. This is for absolute beginners, but for all of you, for traders that are actually looking to make money quickly. Yeah. Don't forget about this. Now, for one important point is that we're looking for is to working out a process. 1 second, sorry. Okay, I'm back again. Sorry about this. This happens when you're doing a this is happen when you're doing a live webinar and you got a dog. All right, so let's talking about this a process for all of you to be aware of that. So now, okay, let's go back again. So we zoom out and we're looking for monthly and weekly. So this is very, very important. So do not actually underestimate that. Now, second point that is really, really important for all of you is the follow. Look for, how do I call it this? Okay, now let's looking into the day traders, yeah? And what the people looking into, because what you're actually gonna look is that I look in the charts, I looking at massive candle, monthly, weekly candles, but what am I gonna look into? What am I gonna see? You see candles, yeah? But what is actually need to focus on is what is telling you the candle. So you see typical analysis of people looking into is that they see the highs, the lows, they see open, close. But one of the things you need to focus is something very important, not many traders do, is that you got the open, you got the actually the close, and then you got the wicks, yeah? But what is important is not only the wicks, is above the wick, below the wick. So what actually is what we call it, I would say for me, is like a more like an art, yeah? Let's think about a monthly candle. In a monthly candle, you go many weekly candles, and weekly candle, you go many day candles. Think about that as let's try to use our imagination for 1 second, yeah? Now, from that, you're gonna understand that on the monthly level, you're gonna week, and above that, what do you have? You got stop loss, you got targets, you got people waiting there. So it's even if it's nothing there, there is executions ready to be actually to take trades. There is actually trade to be take it in and out. So this is actually a desired price. It's like I want to close of $100. I want to close to $150. Even if it actually never reached that level, there is a number in the head of the investors, on the stock traders, on anyone that they're looking for to get out. Even if it's nothing there, it's empty, yeah? And below they're saying, oh, this is a good place to have my stop loss on $50, $60, whatever. So it's the same principle. So you need to understand what is above, what is below of a massive candle, yeah? Okay, stay with me now. So now, if you understand that, the question you need to ask yourself is what the psychology behind of people thinking at that moment. What do they thinking at that moment? Do they want to buy? Do they want to sell? What is the psychology behind those highs and those lows? What are we actually looking for? We're looking for to know what is going on on the highs or on the lows. So this is very, very important for all of you to be aware of that. Yeah. So don't look at the charts like a simple price. Don't look at the charts as a movement. Now let's make it a cluster of numbers. It's difficult for me to explain it without showing you the charts, but let's thinking about that there is a 6, 7, 8 candles, red candles down in a monthly candles. So what do you think is happening? Yeah, like let's just think about I want to use Bitcoin as an example. You got a massive amount of pushing up, green candles, massive candles. What is actually going on? If everyone is overconfident, this is the best. Oh no, yes, no, this is too high. No, this is too low. No, I'm rich. I'm making a lot of money. I'm not gonna close it. So people get emotions in those highs. People get emotion in those lows. And when you see those massive drops, like for example happened in COVID-19, that we have massive gaps on the stock market, gaps in indices, forex, everywhere was gaps down and then up again. So people was panicking. So from fear went to panic. So you need to actually to see the charts and change the way of people looking the charts from a simple chart to a feelings. What they actually people feeling in a cluster, in a group, in a number. So you need to be aware of that. It's like what actually is going on in the mind of a group. How I will feel myself if I have a stock at this price. Just look at, don't think about that you put money on it, just thinking from the long distance, thinking that you have money of $100 And then the price went from $100, it went to $50. How do you feel? So I ask you a question without actually put money on it. So let's say from $100, it's not, I don't care because it's too little, I don't mind, blah, blah. Okay, let's put bigger number. Let's say $100,000. All your money, all your savings, put all the money there. And now from $100,000 went down 20%. How will you feel? Oh, I cannot do that. It's too much. It's all my saving, all my life, and out. And scared. After 10%, 100. If I go 100,000, I lost 10,000, and out. Or 20. Oof. That's all my savings. I cannot hold in it. Blah. What about when you go to 50? Oh, I cannot close it. It's too painful. What am I gonna do with it? You start to have heart attacks. It's like 50% of all my saving, all my life. I'm gonna lose all my money, and 50% is gone. So what am I gonna do with my life? It's not sustainable. Oh, how am I feeling? You see, this is how you need to thinking about it. Now, what about if it's going to 90% down? I give up. I don't care. I don't mind. That's it. It's not my point. I don't care about how it works. I lost everything. You got a point that you say, I lost 90%, I lost everything. And then traders like me come in and they buy. If it's a good stock to buy, because it's cheaper. Yeah. But then this is how you need to think about. Somebody will buy on the very low, somebody will buy on the very high. So what actually makes you to feel those emotions is the movements of the market and the amount of money you have as well on that particular stock, forex, commodity indices, your accounts, whatever. So all this together, it make you to feel different things. Now thinking in a global number of people, massive number of people, the hedge funds, the banks, they don't actually go feelings, but they go targets. Yeah, they need to make 15 to 20% in a year to be sustainable on the long run. So do you think banks, they don't have fear? No, because they got a lot of money. They get fired. There is people hold those positions, working on in those positions, and they get fired because they are not dealing with their positions. So you need to think that even the big ones, they got problems because they fight against all the big ones. Yeah. So we are a small fish. We don't move the market, but those big fish, they're fighting with each other to get as much possible from there. So be aware of that. So looking into that psychology from the distance, from the monthly, from the weekly, from the daily, this is what make you to be aware of what is going on the long run. Now, observation. Be patient. Do nothing. Just wait. Wait and observe the market. Say, oh, but the market is going. Oh, the market is going down. It's going up. Pay attention to what you said. The market is going. I need to go in? No. Think about the other people who are thinking the same as you. If you're thinking that and you're honest with yourself, it's not about you jumping into the water because everyone is jumping already into the water. Am I going in? Am I not going in? So I'm scared. So the question is, what will you do with your feelings? Will you jump in? First, you need to understand that happened, those feelings. And those feelings that happen is where you need to take advantage of them. I'm aware of that. I know what's going on. If it's happened to me, it happened to many people. Big ones, small ones, everyone. So if everyone, what do you do when the Bitcoin is too high? Everyone say, oh, I'll hold it. And I hold it and I hold it until when? Until I reach 1 million. Okay, yeah. How many people actually know that they went to 170 or $17,000, went down to 3,000, to 3,000, to 40,000, to down again? So and it's constantly down, up, and closed down, open. All those people lost money. So those ones that hold it for a long time is those ones that didn't care, or they go a very stricter rules to hold positions for 1, 10, 20, 30 years. Yeah. So will you be able to hold your position after, let's say it's going to 50,000 and went down to 3,000? So how am I going to hold it? I need the money. So I did all my savings. So this is what happens. You're just risking too much, you're risking too little. So be aware of that. Is always somebody is on the top, somebody's at the bottom of those candles that nobody actually see, that look like nothing. Always we pay attention on the candle. there is a candle. Yeah, but we need to pay attention to the cluster of candles, and we need to pay attention what will happen if somebody, because we say, okay, what will happen if we say if it go down to 50% because we see it, but what will happen if it's going to 50% down and we haven't even see it? What will happen? Yeah, people imagine that now the stock market is going up and up and up and up. What will happen if the market is collapsed 10, 20, 30, 40, 50%? What will happen if we have a third world war and everything start to collapse? So what actually, how do you actually react to those moments before it's happened? So I not say to you guys that you do not need to wait. You don't need to look at the charts and only observe what happened on the COVID-19. You need to observe what may happen, and not actually how will we feeling if the trade stocks, indices, everything is going up to something very, very high. It go to 1 million Bitcoin. What will happen? Am I closed? Am I not? Am I panicking? I want to close, but if nobody buy and sell, I cannot sell my stock. So what will happen? So be aware of that, is that you have to be in those situations which nobody is going to be there before you. You must to feel that before it happens. Make notes. Go in front of the charts. You don't need to trade. You just need to observe the market and look at the charts and say, okay, from $10,000, my stock can go to 20,000, to 50,000, and you don't see any candles. There is no candles there. Nothing. Forget about that. There's no candles. Nothing. There is no levels. Like now the market is going to a new high. What happens if it continue up and up and up? And you know there, let's go in now. And then when you're going in, everyone is going down. Anyway, so what I try to explain, you have to imagine and prepare all the scenarios, what will happen if going to those levels, and how will you feel, and how a big cluster of people will feel on the highs and on the lows. Okay, so be aware of that. This will give you a massive advantage against any trader. Now, for you, that is a small trader, me and a small trader, we just do a small amount, and you're looking for make £1,000 a day, a week, a month, whatever, that £1,000. So now, how am I going to feel if my stock is going to my trade, my forex is going 1% up, 2% up, 5% up? So as you see, we're talking about from a massive scale to be aware of actually the global market direction. But what about now your trading, your strategy? Yeah, a simple, easy in and out strategy. You're looking for an entry and an exit. You know now the global market is going long, it's going short. Okay, fine. You know people will be panicking on these levels, on that level. But what about you now? And this particular level when you try to make from $1,000 to $1,010, $1,020, $1,000. What would you feel if it's going to $2,000? Your stock, your entry, your whatever you have. Will you close it? Will you not? So you need to define that before. Yeah. So how to use this analysis of how others feels as per charts. So this is the way I just try to explain, is that how do you use it? It's like you need to, when you put yourself in the situation psychologically and you've been honest with yourself, how will you feel if you are the bank, if you are the hedge fund, and you're thinking, okay, and I am the hedge fund, I am the bank, my target is 15%, and now I'm looking forward to make this amount, that amount, yeah? So how will you feel it if you are the hedge fund? Think about that. You're making 10, 15%, why you need more? Because, I need more. Yes, some people will need more and more and more and more. Yes, it's true. But how those banks will feel? I go hit my target. Thank you very much. Bye-bye. Next year, it will be another year, because those traders, those investors, they already make the target of the year of making 20, 30, 40%. Thank you very much. Bye-bye. Next year will be another year. And they know that. They're looking for that to hit the target, to have a nice green book, and that's it, moving on to the next year. So you're going to see high volatility now in September, October. Maybe November, because there is some people that still try to make a bit more. December, that's it, it's done. Many of them already been completed. Those ones that didn't, they're gonna try pushing to recover the losses. But the rest, it will be done by November. That's it. No need to be worried about make my 20, my 30, my 40%. Thank you very much. Bye bye now. So to be able to use that in your advantage is to you to look at the charts and the big time frames. Yeah. All right, guys. So I'm gonna ask you a question to all of you. Yeah. And you tell me, please, what is actually how? Being honest with yourself. How often do you look at the monthly and weekly charts? Once a week, once a month. I never look at it. What is actually the time frame you use? 4 hours, 1 hour? Just got curiosity. I just would like to know how, guys, you take care of these activities to look at the charts. Or maybe you don't even actually trading yet. I don't know if you're trading, guys. No? So just writing down for me, please, if you actually look in the chart, which time frames you're normally looking into, if you have done this exercise of looking the charts and observe the market and observe the global market direction. No? All right, so it's okay. We'll see about that. Okay, guys. Now this was the presentation for today. Make sure that it's clear. Let me recap what I tried to explain to you. So the most important, believe it or not, is very simple, but people don't even pay attention to it. You must look into monthly and weekly and observe the market from two perspectives. One, to be thinking that you are a multimillionaire and you're looking to know where the market is going, and another perspective that you are a trader and you need to know what is going to happen in the market. Okay, try to pretend then those two scenarios. Then the next step is to go yourself and understand the principle of how a candles works. Yeah, so you have to understand that the candles, they have the open, the close, the wicks on the highs and the lows. Yeah, those wicks. But you need to understand there is something above and below. Yes, it's not only the candles. Okay. Whatever is above is something, and whatever is below, even if it's empty, is something too. Okay, there is emotions in there. There is people waiting, stop loss targets there. Okay, so be aware of that. Now, the next step for you is to actually to do that, is to focus into, when you look in the candle, look in the monthly candle, look in the year candle, then understand what will be the psychology of the macro of the people from UK or from China or from USA. How will they feel if the market is going too high or too low? What do you think people will do? And you think, I don't know, I'm not an expert of this, Danny. No, I'm not asking you to actually to be an expert of this. I'm just asking you to actually to know how will you feel if this is happening. If you're thinking that you're speaking by the voice of all the Americans and the US dollar against GPY is going too long or is going too high, and the GPY is going short. How would you feel if the stock Tesla is going 100 times bigger? How would you feel? What do you think will happen? So this is the key: is to what do you think? It's not what everyone think. Yeah, it's what you think now. Whatever you think, if you're honest with yourself and you actually, normal. Which is normally everyone have normally the same kind of feelings in general, and many occasions it's similar. How will you feel into that situation? And that is the key for you to actually to create your own strategy, to create your own processes, to be able to in and out understand what people will do if they go too high or too low. Yeah, because as well as I say, if you think because this is actually quite interesting. When somebody go from 1,000 to 2,000 and it's 100% more profit, nobody want to close it. Nobody closes the trade. I want to make more. But when it's going from a 1,000 to 100, 90% loss, I don't want to close it either, because I lost everything. Or the pain is so hard then it closes it. But when it's too high, there is no pain. You understand? Because it's benefit, it's profit. So it's not pain, it's money in my pocket. You need to think in from a global grouping. You need to think in like more like a group, like a thinking about how I'm going to be feeling if it go to that low or that high by percentage. Forget about then now when you need to think in is percentage is money is percentage. Forget about that anymore. Don't thinking about when you first we do this exercise. Understand the global psychology, your own psychology. But then when you're going into, you need to stop thinking about it. You need to thinking about mathematics, simple maths. Okay, when I'm going to get out. That's it. So I'm going out when 10% is down, 20% is down, because I know my psychology will be triggered. Or when I'm going 100% up, I'm going to get out because I get greedy and I'm out of control as well. You see, you start to adjust it based on your personality and psychology. Yeah. So people looking for weekly, daily, and 1 hour. Okay, perfect. For all of you to be aware of that, I'm looking for 3 months, 1 month, weekly, daily, 4 hours, 1 hour, 15 minutes, and 3 minutes. Yeah, this is all my time frames. So, okay. This is it's not a short one. This is actually I want to actually show you some examples with the charts. I couldn't, but let's work out an exercise. Yeah. So that is all of them for you. I don't know if you have done the exercise from the previous webinar that been actually explained. I hope yet, but the exercise for this week to show you next week is to be observe the market and make notes. Don't trade. Yeah, observe the market. Choose a stock. Choose a forex. Whatever you want. Look at those prices and see what will you do. Use TradingView. TradingView is an easy tool that you can actually do replace and look at the market and observe how will you feel if you go and enter here and exit there with this and put like the amount of money, because you can do a demo on TradingView, exactly the amount of money that you really need. Okay, so this is actually, what is that question? Is never what? Volume important? If yes, it's important only if stocks or also in forex. The volume is important for both, but we do not have access to the forex. It's after, because it's that there is that's only is things is for the banks. We don't have access to that information. But yes, for stocks we do have the access to the information, and we can use an advantage if it is high volume. You can actually, the elements for you to be aware of that are part of the charts for 4 days, sometimes weekly. Okay, so the most important thing about the volume is one of the main components of trading. You got price, and then you go volume, and you go time. So I mean, when you buy and when you sell, that's it. The rest, all the other things around, it's just been created to make it easier. Yeah. So now, guys, this is the end of this webinar today. It was actually quite straightforward. I will try to explain more details next week with more charts and examples. And if you actually want me to check for you something, we can do it as well. Now, what we're going to do now, I would like you guys to ask me any questions you want. So let's go for FAQ, not only about this particular topic of how to look in the chart, anything else. Okay, why do breakouts fail? If they're related to mass psychology, or it is related to mass psychology, what do you think? This is actually quite a good point, but it's like, what do you think? What is actually you think this is happening really? Not what I'm thinking. What do you think? You just tell me now, please. In the meantime, when he's writing down his answer, anybody else go more questions, please. Anybody have any questions? No? Yes? Okay. So I'll wait for, it's a delay of 10 seconds, I believe, here. So I'm gonna wait for you guys. After that, that's it. Let's see. The fact, okay. So okay. Well, you're talking about liquidity, support, resistance, and all the stuff like that. So you're looking for, normally, traders looking for the highs of a candle or a group of candles or a group of area. But what about actually higher than that? What about higher than that? So there is anybody there to looking for that? Remember that if let me see, one question. You say 200% is not practical, but 200 to R to 12 months. Okay. Regarding the percentage, yeah, all my life I've been said that it's not possible. Okay. To make 200%, 300%, 400%, whatever that, okay? So, because in maximum, I myself, I've been trying to risk in on that, and I try to make those percentages, and yeah, I need to risk more percentage to make that percent, yeah? Like I wanna make 222,000 on the COVID-19, I was risking almost 30% of the account, so of 500,000 account, yeah? So, this is actually what happened. So, yeah. I was quite high risk, but obviously I have very good analysis and I was very confident that will work. Okay, but so why is not possible? I've been saying always it's not possible for many years, yeah? And I'm still thinking that for the majority of you, it's not possible, yeah? Now, it is possible for me, and the answer is now is yes, okay? And I can say this with quite confidence because I've been working on this for 3 years now. If you saw me, guys, on the World Cup competition, I start and I am about 60% right now at this moment. You cannot see me on the table because those guys make more percentage than me. But 60% on April, it was from 2% risk. So, well, actually it was more because the drop down already have almost, it was dropped down about 15%, and I recovered the 15% plus I made 60% more. So it is possible to make this now, but for normal traders, it's not. And I'll say that I'm not normal, I'll say that you need to work out a very strong, there is a lot of things that you need to work out to be able to achieve this, and this is not normal. Okay, to risk in 2% and make that, not even the famous Larry Williams that make it from 5,000, no, actually for 10,000 he went to 1.1 million. He was tell us that he's risking 10%. So realistically, it's not possible. So, but I am on that path to be able to make the impossible possible. So, as I've been saying always, if you go somebody there online telling you to try to sell you a strategy that said they can make 200, 300%, the question you need to ask then, how much do you risk? How much do you risk per trade? And they say, oh, risking, well, what does that question is that mean? That's what we will say. Or they say, they don't say the answer. Or they are risking, or they say quickly 2% because they go down in the head. So you need to make sure that this is actually correct, because I haven't seen anybody except me so far at the moment that I can risk in 2%, 1% and make that 120% in one single trade. So can you do that? Realistically, it's not. Why the majority? I got a table here in front of my next to my screen, all the legendary traders with their percentage after many years, from 58 years to 13 years, and all of them making an average of 20%. The only one, it was Jim Simones, that he made 66% for 41 years. Is the only one. Yeah. But the rest, the majority of traders, they actually drop down this ridiculous high, and the majority of traders will lose the money. And if you're looking for to make 200%, it's unrealistically, so it will not happen. So I got doubts on that. You achieved that. It took me 25 years. So yeah, I just found out this 4 years ago that I was able to do it. Okay, let me see. So also make almost 7% in a day in challenge account, a live webinars video, blah blah. Yes, it's true. You can actually make 7%, 20%. You can make 100% in a day. But the question, how much he was risking? And you can see they try to risk the whole account. They normally funding accounts, they go 5% maximum, and they're risking the 5% to make 7%. That's 1-to-1. So this is not actually trading. This is actually gambling. It's like me taking my account, full account, and say, oh yeah, I can make 100%, and I'm risking 100% of my account to make 100% or 200. Because imagine that if I go my win rate average on my STT strategy 6R, yeah. So if I'm risking 100% in one STT and I make 6R, I will make 600%. But is that sustainable in the long run? The answer is no. You know, this is the key. The key is sustainability. If you try to be rich for long, because what will happen next? I made 600%. Let's try again. And the next trade, you're risking 600 to make another 600, and you blow up everything. So what I try to explain to you, the losses, they are there. If you don't take control of the losses, you will blow up your account. Even with the strategy I create new one, Mega SG, that have a 50% win rate, 50, and when I win, I make big number. It's still 50% loss, so I cannot even risk in whatever I want. Let me see. Okay, how you told our target hedge funds traders what are their drop down limit in general? Normally they're going for 0.25, 0.10, 1%, 2% max. That's what they're looking for, yeah. So this is for hedge funds and banks. This is what actually when I was working in Barclays and Credit Suisse, this is actually the drop down they have maximum. Yeah, 2%. Let me see. Compliment you. So you make 7% webinar in 1 day. Yeah, I make 7% in a day. Yes, it's true. It's true. But I don't know if it was risking 2%. So then it would be 3. You know, that was on couple of years ago, 3-4 years ago. Yeah, there was about 3 years ago, and I was risking about that number because now I don't risk more than 2%. For sure was 2%, I make 7%. Yeah, that's okay. But now this is not actually for the whole year. Yeah, this is what they're looking for, 2% drop down, 3%, 4%. So one of the things I saw on the banks and hedge funds is that the fire traders, if they do have a 1 or 2% in their cake of the portfolio. So if they manage 100 million, which is nothing to do with the whole package, and they lost 2%, they fire them. That's it. They kick them out from the portfolio, from the trading floor. That's it. So this is the standard. So to be able, like for example, when we start City Trust Imperium, we are suggesting to have maximum 2% drop down. Yeah, because this is the real percentage that traders use in banks, maximum 2%. So, and that's what make you very disciplined. But they are not. Nobody follow that. And so anyway, so we need to be more buffer for everyone. So, yeah, for me, I try to risk in 2% maximum per trade now on this World Cup competition. And now, yes, I call what is called Mega SG. I can make up to 100, between 60 to 120%, because I create something that's called compounding. Well, nobody have done that before, which pretty much I'm risking everything on the profits, to give you an idea. So, but realistically, not many people, not even top traders will do that. Why? Because imagine to wait for 6 months or 1 year to hit the target. Yeah, I'm talking about investments. What I do, I'm risking everything 2 times or 3 times or 4 times or 5 times or 10 times. So what means I find a new opportunity and risking all my profits that I've been running for the whole year. And what will happen? They got 2 choices. One, or I'm wrong and I hit my stop loss, which will mean 0 after 1 year, or I hit the final target and I make 60, 100, 200%. Well, 120 is the maximum I see, 120%. So this is now possible. So, but I'm risking 2%. Now, realistically, when you see that in the market, people doing that, that's not real. Okay, that's not realistic. I just started telling you this, guys, is an exceptional case. Well, let's keep it that simple. Extremely exceptional case. Yeah, I found this. I'm the only one right now worldwide they're doing this kind of a strategy. So nobody's doing it, okay? Because nobody want to wait for 1 year and then have 0 profit, okay? I'm doing it because I believe in my strategy fully, 100%. So be aware of that, guys, yeah? Realistically, you're looking for to make 20% a year, maximum drop down to, in your case, because you are a retail trader, so I would say 4%, yeah? And make 20. This is what you're looking for. So the core question, I think, do you think a trader should risk open profits for more profit? Okay, well, this is a question that you need to ask yourself psychologically. Will you handle it to risking your profit for more profit? Because this is what I do myself. Not many people like to do this. Okay, let me ask you a question. Or let me ask a question to all of you, yeah? And ask this question myself. Imagine that you have 1 million, okay? Now you have the choice, you have 2 choices, yeah? Or multiple choices, but you got 1 million and then you got the opportunity to your target is 1 million, okay? Now, you trade 1 million is a lot of money. You're thinking that is a lot of money, yeah? Okay, maybe for you it's 10 million, maybe it's 100,000, whatever is your number, yeah? Thinking a lot of money. Now, if your trade is go up 50%, we're not talking about the target, the final target, 50%, will you make 1.5 million? No? Okay, now, will you close your trade? Because 500,000 is all your life savings, or it's actually you will live like a king forever. Yeah, it depends of the country you are, but your target is 1 million. Now, 1.5 million, will you take 500,000? Yes or no? You say no. I'm going to look for my target. Okay, now let's do this follow. Now, will you risking 500,000, yeah, of that profit running to make another 500,000 plus the one you're running already? So you'll be talking about that if you hit the target, you make 1 million, but now you're risking 500,000 more to make another 500,000. So it means you will finish with 1.5. But risking that 500,000, you got the chance that you will be 0. So would you like to do that? This is what you need to ask yourself. And maybe actually you're waiting for 3 months, 6 months, 1 year. So be aware of that. As I have done that with Morgan Sterling. It was only 4 months, actually 5 months. I closed that trade, I risking 10 times, and I risking all the profits. Yeah, it's done. It's closed. Would you like to do that after 4 months to be break even or close with massive profit? You need to make the decision yourself. Okay, do you think a trader should risk? Okay, so guys, keep that open question for all of you. So now this is over for today. So guys, so see you next week. We'll try to make sure that I can actually show you the charts. We can play a bit of the market and see how things going to explain more about everything. So let me see. Money when you are trading. The difference between me and the difference when you are a trader already, you don't think about money. You're just thinking about to follow your rules. Your money, they don't care. You just, myself, I'm looking for to make very large percentage always. So I don't care about the money. Don't care. If I don't make any money, I know that if I got again, if I'm totally poor and I have no money, if I find a way to, I will take those funding account, I will start to make money again. So it's no problem. But for me, it's not about money. It's about a prestige. It's about to be the best of myself. It's to prove myself that I am better than myself. I'm competing against myself right now. Yeah. So I want to be the best trader ever possible. And for that, I have to make this a, I need to wait and wait for months if it's needed to hit massive targets or make zero. So, and because this is me, my personality, my path, my target in life. But what is your target? This is my big tick why. What is your one? So why are you actually trading for? So you need to find that for yourself. Yeah. So guys, see you next week and bye now.